Let's see if this worked. Hold on, because I just did a bunch of stuff. Let's see if this worked here. Let's see. All right, we're good. Sorry, guys. There was another stream. All right. Sorry about that. So I was already streaming, and things got a little messed up. All right. Things got a little user error, I guess, right? It was up, guys. You know what I mean? I don't know why it connected to a different one. I had the stream key to it. I had it out all good. It just couldn't. It was just too much. So, what's up, guys? Can you guys tell I'm excited? I have a great lesson for you guys. If you could, do me a solid, do us a solid. We're building a community here. If you could like this video, if you could subscribe, if you could also share this with someone, a random stranger, a friend, someone that's probably looking for a place to go to hang out, get some trade ideas, talk trading, all that fun stuff, that would greatly help us out. So it's hard for me to be excited right now with all that's going on in the world. It really is. So let's first, because the markets are really the last thing people should be worried about, and what we worried about. Well, we have to worry about it because this is how we make a living. But unfortunately, let's just, say a prayer for peace and for these innocent people and for for what these countries are going through right now, because, that's what's important. All right. It sucks to have to say, and I really hate it when people say, I hope they do this, I hope they do that, so my puts print. Like, what? Like, come on. Don't be that person. Don't be that person. So I want to thank you guys for joining us. Again, let's just, remember what's going on. It creates volatility, right? We just had yesterday Iran saying that they were not going to intrude if they, had off ground offenses. And then today, a few hours later, they say that they're not. Who knows? You know what? We don't know what to believe from them. So we're not going to take anything that they say for face value, and we'll just go with what is actually going on. And they're not there right now, right? They're not invading or getting involved, it seems. So we're going to stick with that. So with this volatility, or with this stuff that goes on, it creates volatility, guys. And what we want to do on a daily basis is find pockets of liquidity, right? Where should we be trading? That's what I'm gonna cover tonight. That's gonna be tonight's lesson, right? Because we're coming into earnings season. That's one. All right, we have volatility with this, the two wars that are going on. So we could be going about our day, things could be going well, and all of a sudden, just like that, if you do not have a Squawk Box or any type of news outlet to let you know when things happen, like as soon as they happen, things could go against you. So please do yourself a favor and remember that. Don't forget it. Because if things are going well, all right, keep your expectations low. All right, take your profits if you have them, because you could be in a trade and things could go south real quick, faster than you can blink, literally. All right, I've seen it. If you haven't seen it and you're new to this game, all right, you will go from a price of $100 going up to 101, and you just blink and you're at 94, and you just boom, you get this flush. Don't see that coming. I hope to God it doesn't come, okay? Because I hope that means something's going on. Something's not good. So we have two wars, okay? All right. So far, the market is liking, I guess, the fact that this is futures here. This is ES to be, to let you know what it was. So anyway, I don't think it's just the markets are liking anything. It's like, I don't know if the markets, they care. Yes. Okay. Because there's uncertainty. We don't know how this is going to affect oil. We don't know how it's going to affect what's going to happen, right? You don't know because we have the United States, right? We sent in that warship. Well, that's enough there could be some uncertainty there. So I said Friday that I thought we had an area that we needed to revisit, and that was back to the upside. If we do get back up there, I will probably take my chances with a small position, put a starter position on, back on the short side. Okay? But I want to talk about earnings. Okay? We're going to go through the earnings calendar. We're going to go through some lessons, because it's really important. This earnings season, to have a game plan, right? And I'm going to give you guys some pieces of the pie on this because I'm going to come out with it more Monday, maybe Tuesday, because it's important to really put yourself, like I said, in the pockets of liquidity. Again, I'm a little off because the stream had just gotten completely messed up with another one. So we're going to have to deal with the camera and all that stuff, I suppose. So you just have to bear with me. It should work itself out. If not, it is what it is. I'm just going to have to turn the camera off then. All right, if it keeps doing this. So look, earnings. That's the first thing we're going to get into. But first, let's go into the earnings calendar. Briefly, we'll go into the earnings calendar briefly, but first I want to go into the economic calendar. All right, because we need to know what days we have things going on, right? What days the volatility, right? Because we use this again. I use this for using my moving averages and how the charts is set up going into days like, let's say Tuesday, if we have a setup that's I think is kind of bearish, and I'm like, hey, we're just bumping into that 50-day moving average again. We have retail sales. Is that going to be half the reason why we reject that 50-day or reject that 100-day moving average, right? So it'll give you a timeline on how you can expect the markets to move if this, then that, right? In accordance to time, right? Later down the week. I know Tuesday should be retail sales, all right? We have a 3-month, 6-month bond auction. You see why I tell you guys to always pay attention. Oh, and that's the other big one. I almost forgot because now I just got thrown off with everything that happened. So, like the title says, why did the 30-year do what it did, right? It was awful. Well, I'm going to show you guys something in this video that's going to really kind of lead to the possibility of higher for longer. All right? I'm going to get into that because I don't think you're going to find it anywhere else. So you're going to have people talk about, man, I thought there was going to be a recession. I thought there was this, that. The second half could still be bad. We could still start the recession first, second quarter of next year. It could come anytime, right? It could start to come anytime. Like GDP and where it's at shouldn't surprise you, right? If it surprises you, you're just probably listening to someone else or other people, right, that don't know what they're doing because they don't do the research, right? You should go back and go see what GDP is during rate hike cycles. I have the chart. I could pull it up. I've pulled it up before in many of these videos. Okay, this is the lag effect. This is not anything new that a year and a half, 2 years into rate hikes, GDP is still, up to where it's at. 2.5, if not 3, 4 a quarter, right? But we will start to see that slowdown, guys. It just takes time. It takes time. Now, if you were to think that there was a recession, I'm going to just take this off, guys, because I don't want to keep doing this. I knew this was going to happen because the stream was messed up from the beginning. So, where was I at? Bonds. 30-year. You've seen the 30-year come in Tuesday, or Thursday, I mean. Pretty bad, right? Rates higher, right? I forget what it came in at, but you actually saw a smaller piece of it Wednesday, right? On the 10-year bond auction. But why does that happen? There's got to be a reason why, right? Okay, there's got to be a reason why. I'm going to touch on that. We have Powell this week. I'm really curious on the questioning, if he's even going to take questions, what the meeting is going to be about. I have to do more work on that. But we do have Powell. We have other Fed members. I'm sure they're going to speak on all this stuff. So there is another market moving data. Not data, but you know what I mean. Sorry. I feel like I'm all thrown off just because of the beginning of the stream not setting up correctly, which is crazy. So Fed Williams, but more importantly, retail sales. Okay, I've said this before, but if you don't know, other than 2 negative quarters of GDP, 2 consecutive negative quarters of GDP is a recession. But if you go to the other side of, you have one data, like one, see, I can't even find the words right now because of the stream. Other than 2 negative quarters of GDP, what else do they go off of to say we're technically in a recession or not? Okay. Well, that category is actually retail sales. The other one's industrial production and non-farm payrolls. So you have 2 negative quarters of GDP, 2 consecutive quarters back to back of negative GDP. That's one tell that is technically by book a recession. The other is, okay, if we don't have that, but we have negative retail sales, okay, negative industrial production, like non-farm payrolls is just not good. Those 3 categories right there is that other one. Okay, you can use them both together however you want. All right, but by book, that's what it is. You guys can look it up, do your research and look into these things. But and again, if you're just joining us, we're going to go through different lessons for earnings because it's important. You guys are going to really like that, and I'm going to hurry up and get into it. You have building permits. Okay, we have some obvious, the same data we get just about every week or every other week, right? We're going to get some oil production, stock changes, all that fun stuff, okay? 17-week bill auction. You're going to start seeing people watching. You're going to start wanting to pay attention more to these auctions more than you did in the past. And I've told you guys, watch them. It's going to give you an idea watching them. And when a surprise comes in, you're already there watching it. So you're like, oh, shoot, look what's going on. This wasn't like we come in at 4% and, you get like a 4.1, 4.19, right? 4.2. And then you get another one that comes in. The next week you go from 4.1, 4.2 to 4.9. That's what happened with the 30-year last week. What's up, Bingo? I'm good, Bingo. How you doing, man? I am good other than what's going on in the world right now. Just for the safety of other people and peace, I'm doing great. I have a really good lesson, but I appreciate that. I hope you had a great weekend as well, man. I do. I hope you guys had a great weekend. Hope you're ready to get to it. Guys, this volatility's coming. I'm excited as I can be for it. Aside from what's going on, I'm really excited, right? And I'm really excited to help you guys go through this earnings season and capitalize off of it, all right? Because this lesson I'm going to get into, just one, I'm just going to give you guys like a taste, right? Because I was working on it before this stream, and I kind of want to just get it all out and done and do it all in one video. But again, more Fed speakers, right? Waller, Williams, Bowman, they're all out. You have a 20-year bond auction, okay? This is why you're also, and I thank another person for bringing this up, why are you still seeing TLT and stuff like that crash? Well, other than the fact that, this is from what I've seen on professional money managers, their like roadmap, I guess you could say, is coming out of a bear market. As the equity markets start to, lift to the upside, you still have that secondary flush in rates and long-term yields, right? You still have the yields just still, not turning them, not cutting back, right? So the price cutting, still capitulating to the downside, and we're seeing it in TLT. There are a couple stats that I have given out. The 2-year has never peaked before the bottom, right? The 2-year has never peaked before the bottom in the S&Ps. Okay, the bottom in the S&Ps was in October. The 2-year is still making new highs. Was making new highs, right? So, do I think we put in another bottom? I'd hate to see it if we do, because we've got a lot of buyers sitting in there from 350 to 390. I tell you right now, if we get to 385, 390 again, I hope you're not going to sit there and just watch this stuff go by. All right, you need to think about putting it into your long term. You guys need to think about taking that opportunity while it's there, because you're going to thank yourself in 10 years from now. All right, if things are ever that bad, you don't have to worry about money. All right, if things are ever that bad, we don't have to worry about money. So just keep that for what it's worth. And tell yourself, when there's blood in the streets, you got to be buying. Even if you just buy pieces, right? You come in, we're making a new low. Buy 1 or 2, buy 10, buy 20, 30, whatever your capital, whatever kind of capital you have to work with. All right? And that's how you, over time, are able to build your net worth. right? And there's a lot of other great things you can do with that, right? You're buying things that don't go to zero if you buy the right companies, right? Instead of somebody and other people who like to go buy a bunch of toys and shit, and then they find themselves like not really actually being able to do that and have like actual nice things. You're out buying companies. You don't have instant. You're not worried about instant gratification, and then over time you've built yourself up this big nest egg, and you still have your money, and you can go buy yourself a nice toy or two, right? Or you can go on a vacation, you know, and still have your money and still do like, there's just maybe you want to go borrow some money and you could borrow against it at a very cheap rate. Something. I'm just saying, save your money, but don't just save your money, invest your money. And if you don't have any short-term bills right now, you need to think about it. You should really think about getting some 2 years, some 6 months, right? Yeah, now's the time. If there ever was a time, now is the time, right? So again, Fed members, we do have some data. Again, retail. So let me get back to it real quick. Um, and then we have our and then Powell on Thursday, right? I'm pretty sure Thursday, yes. And then we go to initial jobless claims that day also. Let's see here. Every Thursday we should get initial jobless claims. Yep. So we have initial jobless claims, which we're we're just like ticking on that like 100,000 that high 100,000 mark. We haven't gotten there. I don't think we will. Right? We did have a little jump last quarter or last week. It wasn't that great. Like I don't know if you guys remember, but like 2 months ago, what was it? Yeah, 2 months ago, we actually started getting initial jobless claims rising. Right? We had 2 consecutive weeks of the labor market, I guess, showing signs of tightening. Now, initial jobless claims can be a little, because who isn't working versus who is claiming, and that you can get into some fishy stuff there. But it's still tight. It's still tight no matter how you look at it. So we do have Powell again. Look, guys, pretty much every Fed member you can think of: Goldsby, Barr, Bostic, Harker, Logan, because they're going to go into their quiet time where you're not going to hear from them. So they're all going to come out, and then you're not going to hear from them for about a month or so. Right? They go on the period where you don't hear from them. And then again, Harker on Friday again. So that is our economic calendar. Retail sales. There's a lot of stuff here. Even watching other countries, guys, it's really important. Building permits, right? So Canadian inflation rate year over year. Watch that. So let's go into it, right? We have earnings coming up. All right, we do have earnings coming up. Thank goodness the camera's like working with us. There's a couple on here that I'm going to watch, and we'll go over them. Okay, we're going to go over the charts, and I'm going to go into some lessons with these earnings, and then we're going to go running right into the charts. I'm going to make this as quick as I can. Bank of America before open on Tuesday. Lockheed Martin, right? You might want to go listen to that earnings call of Lockheed Martin for everything that's going on. What do they have to say? Goldman Sachs, Johnson & Johnson. How does Johnson & Johnson fare if we start sending packages over to all these countries? Or do they talk about, they're getting, aid, military aid to these countries? That could benefit Johnson & Johnson, right? You did have some news Friday with Procter & Gamble. So I guess they came out. They have earnings Wednesday morning. I guess they're coming out, guiding lower. So you're getting more guiding lower. And also we've had a lot of CEOs leaving companies, right? They've got a second opportunity at the markets at, near all-time highs. Okay. It was a good time for them to step down, lock it in for what's coming down the pipeline. Okay. We still have a lot of rates to still worry about. Okay. Now, when I've done the work, the stuff that I've seen, it's not until a year after the last rate hike. Now, that's past data. Past data is not indicative of future data, right? But, again, when it happens 3, 4, 5 different times, right, probably chances are we can paint a window roughly on when things should happen. I know a lot of them also go from when it starts, right? 24 months from when the rate hike cycle starts. So we're starting to get into that. I still think we have time because we have a lot of liquidity, right? If you guys don't know, the stimulus packages that were made in 2021 and whatnot during COVID, right? They dated a lot of this money to come out at 2028, right? So there's money and liquidity that's going to be able to be had, right? If there's any changes, I don't know, right? Have they taken a lot of these funds and just given it to other countries for the wars that are happening? All right, have to do my research on that. But anyway, airlines. You already had Delta Airlines come out. United Airlines coming out on Tuesday after the close. Now, airlines, I will say, because you also have American Airlines and United Airlines, right? American Airlines should be Thursday, I think, or Wednesday. Let's see here. I know that they do. Yeah, American Airlines, Thursday before the open. A lot of these airlines have already gotten smacked and smoked. Chances are, how well do they have to do to get a rebound, right? And if they don't do well and they come in bad, well, chances are it's already priced in for it. Okay, so I would. This is like a small piece of the lesson that I'm going to get into right after we go over this. Is that take that factor in? Airlines have just gotten smoked, demolished. So how much more downside do you think you can really expect? How much of the downside is already priced in? If they do well, okay, well, they've just been smoked. There's what is guidance? What is revenue? What are margins? Blah, 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 right? That's important. How well do they do? How well do they report? Or do they rate, do they raise quarterly guidance, which would then be year-end guidance, right? So take that into consideration, but I'm going to get more into that, right? Airlines have been smoked, so think about that. You have ASML, right? You're going to get into semiconductors. ASML, Taiwan Semiconductors. Guess what? We just got news, at least, over the weekend, that, the Biden administration is going to start tightening up on chip measures that they brought up last year with China. So they're going to start tightening up the measures. We're going to listen to the earnings calls. ASML, Taiwan Semiconductors, AMD, NVIDIA, SMCI. And we're going to see Marvell. We're going to see on these earnings calls, and, how do the stocks react before these earnings, right? With this news coming out. We'll get the information. I still have to go over the information. Excuse me, I'm sorry. I still have to go over the information. I'm out. I have to get my water. But semiconductors, for the most part, are sitting up near all-time highs. Near all-time highs, right? So we start getting guidance lower, year-end guidance lower, a yearly guidance lower. Do they come in and beat but lower guidance, right? Do they come in and say, we're expecting revenue, like they have a revenue drop but margin increase and raise guidance? I'm going to get into all that. These are things you need to know, because what this is ultimately going to do, because earnings gives you an awesome opportunity for 1, liquidity, 2, volatility, 3, the opportunity, right? When you mix them both hand in hand, okay? Because there's a lot of opportunity, and I want you guys to start thinking about some of these things. I'm not going to guess. It's not even that I'm going to guess, right? I could take a guess, but I am not going to trade any of these unless there's an absolute reason to, unless I deem it necessary, which I don't think it is, which I don't think I'll find myself doing, but I'm not going to pay up, right? I don't know if there's going to be enough of a move that, right, that volatility you're going to pay for, okay, is going to pay off the next morning. Just because there's volatility right after they report during the earnings call, it could either reverse, it could go higher, but then you could come in with a gap down. There's still a war. 2 wars, right? So I'm not going to pay up for that. I'm going to trade earnings the day after. That is where the liquidity, that is going to be the opportunity for me, right? You guys do what you guys want. Maybe you guys know something I don't, but that is the opportunity that I'm going to take advantage of, right? I feel for me, the best opportunity is the day after, and still watching it a day or two after it, right? But we're coming in, man. I love earnings season. It sucks what's going on in the world right now. I'm trying my best to be excited about it, but the markets are just like not really anything compared to what's going on in the world, guys. Tesla and Netflix, two big boys, right? Two of the top seven, two of the FANG stocks. I think we already got you. You know what's funny about Tesla earnings is you usually will already get their delivery numbers, which will kind of already be baked in the price. Um, and we're gonna cover Tesla and Netflix. Netflix has already came in and guided lower. Okay, so think about that. The price has already been smacked down a little bit. Um, I didn't trade that move. I was thinking about it a little bit ago, and I just, sometimes traders have these certain stocks that they just don't, either, they don't do well with, or they just, they have tried to trade them and they're just not the biggest fans of them. Well, that's Netflix for me. I have traded it in the past. It's not that I've done bad. It's just I don't really care to trade Netflix for some reason. I don't know why. Right? An opportunity like you just had. You had a guide lower come out, or a price target lowered. Okay, I think it was from a buy, or it was like neutral to a sell. A price target downgrade, and then you had them come out and lower guidance. So that stock has already gotten smacked. Remember that going into earnings. Now, do they really come in bad? Like, does it, or is it neutral, right? Did they just miss, or do they really miss and still guide lower? That might be the opportunity where you could still get a day two continuation type of move. You just have to keep your expectations in line because it's already gotten smacked. Procter and Gamble, again, I've already said that, came out with news on Friday. You have some banks, M&T Banks. You got some brokers, Morgan Stanley, Taiwan Semiconductors. All right, Nokia. All right, so there's going to be some good opportunity here. Interactive Brokers, okay. Goldman Sachs, Johnson Johnson. So as you can see here, these are some of the earnings that are starting to kick off, and we'll go into it. AT&T. All right, so you want to see how, because you have news for a lot of this stuff. How do oil prices have been, oil prices have been affecting, and Bank of America Tuesday before open. Now, again, right? Oil prices have already affected airlines. The market's already smacked them. Tesla, Netflix has already came out. They've gotten a price target. They've gotten a downgrade, and so on and so forth. So I'm not going to repeat myself. SMSL or SML, okay? And Taiwan Semiconductors, right? Semiconductors, you just got news on them. We do have the NASDAQ, Ally, Citizens Bank, Zions Bank Corp. They were a nice volatile stock when banks were going lower. We're going to touch into banks because I think that's got to do with the 30-year. Okay? Because there's a data set that comes out every weekend. For anybody that doesn't know, we do trade live here Monday through Friday, 6:30 or 7:30 to 4. Come join us. It's absolutely free. We go through the news. We come up with our game plans, and we're going to destroy the day. All right? We're gonna have a great week. And if you haven't done so, if you could, give me a like, hit that subscribe button, pass us on so somebody can find us that's out here looking for a place to hang out and, do what it does. So if you could, it'd be greatly appreciated. All right, let's go into it. Let's go into some lessons. We're going to go right into the charts. So I've talked about it just a little bit. Okay. Earnings. I'll take it over to Netflix, right? Let's go to Netflix as an example. Actually, let's go to, let's see, I can't really, let's go to Taiwan Semiconductors. All right, let's go to Taiwan Semiconductors. So, I want to help you guys remember, okay? I gave you guys a few thoughts on the markets where I told you guys I thought we would revisit to the upside. We're doing it now. I said it Friday. I said I think we bounce back and hit this target, and then we see, do we make that resistance? But I still think there's a 428 area on the SPY, that 430 area that we needed to test to go higher. But again, we have earnings, so all that could change. Okay, you have two different wars going on. All that could change. As a technical analysis, right? I felt like we needed to bounce back, test that level, which I'll go over, and then we pull it back. That's where I'm going to look to get short. Taiwan Semiconductors. We just have news about that. Chart looks a little bit like AMD, right? Longer term, upside, right? It's a little choppy, but again, the trend is to the upside. The short term trend is to the downside. You have 3 months, 4 months of downside price action there. Take that for what I just said. And literally, if you don't and you're struggling trading, every morning, tomorrow, Tuesday, Wednesday, remember me saying that. What is the trend? Short term, mild, and long term. Okay? Longer term trend, this thing has just been breaking higher, pulling back to that low, that previous low, bouncing higher, pulling back. Well, you didn't hold that low here. Okay? You didn't hold that low. So for me, this is in a downtrend. Taiwan Semis is in a downtrend. It's failed to hold its 200-day moving average. So let's say this is an earnings lesson. Let's say they come out and say their earnings were right in line. Okay, earnings were right in line. They come out and their earnings say their revenue was down, or they guide, right? Their guidance on revenues and margins. They report their earnings are right in line, okay? Market's like, okay, it's pulled back, so maybe it's a few percents give or take to the up or downside of what the market thinks about it coming in line, because it's not bad, okay? But the market wants to know guidance, right? What's the outlook? Because that's what's going to be important. Okay, that earnings data is previous, that's happened. We need to know, right? The market is a discounting mechanism for the future. So we want to know guidance, right? We want to see margins, revenue, and EPS. So I want you guys to look at these stocks, and when these earnings come out, I know it messed up on me. Sorry, guys. Again, if you're just joining us, the stream really messed up on me. It picked up a whole nother stream and really screwed stuff up for me today. So let's say earnings come in line. Revenue was down. Okay. All right. So revenue's down. They're bringing in less money. Or they're going to say they guide that revenue is down. They think they're going to bring in less money. But they say, we think, or not we think, but we're going to raise margins. We're going to raise EPS. Well, if they're going to raise EPS and raise margins, well, maybe they're not bringing in as much money, okay, but they're going to save a lot of money and from somewhere else. So you're balancing that effect. All right, we want to think about those things. Do they come in line and guide higher for the next quarter, which would be year end, right? What is the, as in Taiwan Semiconductors? We'll see what Taiwan Semiconductors does, and then we'll go see what AMD says. We'll go see what ASML says. We'll see what NVIDIA says. We'll see what Marvell says. Is this just a Taiwan Semiconductor? Is it just Taiwan Semiconductors that's suffering or doing well, and others are suffering? Right? That tells us real quick there's a shift in business, that they may have locked in business with whatever, the auto manufacturers. How does this affect the semiconductors, guys? That's the other wrench you got to throw into this, right? How does Ford and GM at a pretty much standstill on a strike? How does that affect semiconductors, right? Now we have Meta coming out. They've already said with their new processors who they're through. Okay. It's all good. Chart issues never. Yeah, it's all good. Yeah. So. Yeah, it was just the fact that, I don't know what happened. I do know what happened. The stream picked up another stream, but I was literally on clicking. I had literally the right stream up. So I don't know what it's doing. I don't know what it was doing. It's just too much for itself. So we have a clear resistance level up here on Taiwan Semiconductors. Do they come out? Do they beat earnings? Right? Does the company come out and beat earnings and raise guidance? And do they throw on top of it, right? They're going to increase revenue. We're going to actually cut. We're going to increase our margins, right? These are things you want to think about going into this earnings season. I'm going to give you guys a fuller video with it when I have a camera that works and things aren't all messed up, right? This is what I'm going to be using this earnings season to. No, I never do. I mean, not that I never do. I play the next day. I wouldn't suggest anyone. Now listen, let me take that back, because there's a couple different ways you can do this. This doesn't have to pertain to options. You can buy the stock, the equity outright. But here's the thing: you got a limit order. It's just, if it's for you, you want to scalp and just kind of play it. Because the thing is, right? You could have earnings come out. You could have raised guidance, this and that, right? Things are going well. Earnings call, it shits the bed, because on that earnings call, the market doesn't like it, and now you're shit out of luck. So you don't know how things are going to happen. Nobody does. Right? Their job, though, is to do the best that they can. So guys, if you don't know, you have two different things to think about. Think about you being a CEO. All right? You have one or two things you could do. Maybe there's three, but the two that I know of. Do you take this time to guide lower, whether you know you're going to do well or not do well? Do you take this time, because of where rates are and the future that's unknown? All right. Do you take that time to guide lower? And when you guide lower, the stock pulls back. Maybe you buy some, right? Maybe you do a stock buyback, and you're going to say, it's just really uncertain right now. Earnings came in line. We didn't do bad. We didn't do great. We came in line across the board. Okay. Do you, as a CEO, guide lower to try to price in the unknown? Or do you let your stock continue to go higher, and then something happens with the markets and then you get crushed? So do you pull the stock back, or do you just let fate have it? Because because right now you have an opportunity as a CEO where it's okay. You are like, it should be, it should be in your arsenal to take advantage of this time that we're in, this uncertainty and volatility, and the uncertainty that we have, right? We still have a lot of rates coming through the cycle. We don't know how things are. So pull that stock back. You continue to do well. You'll be back to where you are next year if things continue that way, right? Or again, the second option is you guide higher. You come in the next 2 to 3, 4 quarters. You continue to miss and miss even more each quarter, and the market plummets your stock. Do you pull the stock back and help to price in, the uncertainty, or do you just continue to let this thing go? You should pull it back for the people that want to buy it, right? You may know things are well, but you could give the opportunity for the company and for the individuals, the stockholders that want to buy it at a lower price. Because in a sense, you still don't know how things are going to turn out a year from now, 2 years from now. The future is unknown. So as a CEO, you need to know that. As a board member, you need to think about those things. Right now, you're pretty much, you're getting a get out of jail free card, right? So, but as far as earnings are concerned, I'll be playing the day after. I'm gonna let them report. I'm gonna see, do they beat? Do they miss? If they miss, I'm gonna look for guidance. Is it lower? Is it higher? Then I'm gonna look at the competitors. Right here, we're talking about Taiwan Semiconductors. I'm gonna look at how Marvell, right, Broadcom, if I'm saying it right, ASML, I think it is, right. Nvidia, Marvell, AMD. How do they report? How does Taiwan Semiconductors fare up against the competitors in that field, right? How does Roblox compare to EA Sports or Take-Two Activision or Take-Two, right? Is Roblox just killing it? And they're all lowering guidance, revenue, and earnings are coming in lower, but Roblox is beating earnings, raising guidance, coming in the Christmas time, okay? But the others aren't. Or they are raising guidance, but their earnings coming in under expectations, right? So I'm going to have a video and I'm going to put that stuff out. I do have some charts here for you guys. Yes, JP Morgan So I was a little, I had a doctor's appointment Friday. JP Morgan was one of my top trade ideas, and I literally thought about getting short right up here, guys. I almost pulled the trigger, but I held off for whatever reason because I felt like I was already coming from a place where I wasn't really going to trade that day. Guys, again, if you don't know, we trade live right here on YouTube, Monday through Friday, 7:30 to 4. We come on bright and early. We run through the news. We see where do we think the markets are going to go. We don't fight the trend. We know where the trend is. We identify the trend, right? The short-term trend, medium trend, and we go, where's the news? All right, what do we think the markets are going to do? What do we think does this news even mean anything? Right? Does this news is it going to provide opportunity? All right. Well, the markets were pulling back Friday pretty bad. And that was my second reasoning on why I should short JP Morgan. Literally, as it's sat up here for a while, guys. The fact that it sat up there that long and that area that was resistance, this was a major level. As you can see how this line's a lot thicker than the other ones. Right? This was a major resistance level that I felt we needed to pull back first in order to go higher. JP Morgan's actually setting up. Let's see how the other banks fare, right? We have Bank of America. We have some brokers like Morgan Stanley and stuff reporting. So right now, right? If I had to say, what's the trend on JP Morgan? Right? Right now, it's consolidating. Right? You're shorting at 150 and you're buying the low 140s, right? There's a $10 range there. Until you get a breakout or breakdown or a reason, it's consolidating. All right. There's a lot of stocks consolidating right now. All right. We're coming into earnings. Like, what's the next move going to be? So I thought JP Morgan. So you have a couple different things going on here. On the daily chart, we have a gap above the 50-day. Okay, and I'm going to go into the SPY and the Qs, and then we'll go into some stocks. I have a list here for you guys. So again, I just wanted you guys to think about that. I'm going to make another video that's going to really dive in deep for these earnings and how to trade them, or things you should think about, right? That I'm going to be doing. These are things that I'm going to do, right? Their guidance. How did they fare on the earnings? Was it a beat? Was it a miss? What's the earnings? And how is the earnings, right? Again, let's say revenue's down. They say we're going to have less revenue, but we're going to increase we're going to raise our guidance on margins. We're going to raise guidance on earnings per share. Okay, that says, all right, so they're going to be able to save money, right? The revenue might be down a little bit, but they're able to save money. So, all right. Now, do we raise guidance with earnings that are down and so I'm going to make a video on it because it's something that you should know, because you want to be able to rate the trade, right? Is it worth trading? That's what I'm trying to get at. And I'm sorry if I'm not being clear, but understanding when these companies report, is it going to open up an opportunity worth trading? There's going to be some that you're just going to want to stay away from. They come in line and don't give guidance. What are you supposed to do with that? And it's a smaller company, right? And let's say you have Apple coming out the next day. Well, chances are you might want to wait. Do you know what I mean? So there's ways that you want to weight these things, right? You want to give them a weighting, right? Is it from a 1 to 5, right? They blasted earnings. Like, earnings were great. Beat across the board. They raised guidance. They're raising margin. They're raising revenue. And they're raising earning per share. Right? That's a trade. Right? Let's say if AMD does that. Right? We're going up. AMD alone is going up at least. How does it fare from Taiwan Semiconductors? Why is it Taiwan Semiconductors reporting that? What if Taiwan misses and they're guiding lower in this and that? That's AMD alone. Their business is booming. There's a trade there. That's what I mean, right? That would be a 4 out of 5 in my book. All right? So that's how I'm going to be going into it. And again, I'll give you guys that video and break it all down because it's really important. It's really important. Friday, JP Morgan. Look at that big wick, man. That was a big candle. That was a big take back on that day. The market's pulled back, right? It's kind of, you don't want to fight the trend. This is why you want to know what are the markets doing or what do you expect the markets to do? Okay, and then you come out and have good earnings, and then the market's pulling back. Chances are you might not want to be long, right? You don't want to fight the trend. If the overall market's pulling back, chances are you're going to pull back, right? And JP Morgan needed to pull back and test that 50-day anyway. It just did it the same day, right? Did all that in the same day. So you do have a gap above that 50-day. It's pulled back to it. It's held this topside resistance here, right? You can see here, this level here. I know I have a lot of lines on these charts, and I do apologize. But this level up here, yeah, let's see. So you did not hold that. You didn't hold this base here, right? This area right here. It's like right there. All right, you didn't hold it. You closed below it. So chances are, I want to see if, if the markets, I think futures are green right now. Or they were. Let's see. SPY, yeah, we're up, but we're kind of flat. So we're up. The S&Ps or the Nasdaq is up 0.3%, 0.2% for the SPY, a tenth of a percent for the Dow. A lot of these stocks we're going to see are stuck between the 50 and 100 day, and maybe earnings catalyst is something that's going to break us out or break us down. All right. So JP Morgan, for one, I want to see if we pull it back and test this previous pivot high here at 146, 147, 146.50, right? 146.50. That's your 100-day moving average. And you have that pivot high there, and I'll go back to it because I'm still unsure, right? We kind of filled the gap on the daily chart and pulled it back. The market's pulled back. There's nothing you could do. All right. So what I would look for JP Morgan is if we try to bounce and cannot get above that double top right here. You see this red box that I have here? If we cannot get back above here, it's like 140, like 150, right? 149.50 to 150.25 in that range. All right. I want to see us pull back to this pivot low from Friday and see if that's where we can possibly grab a short. Sorry, guys. Whoa. Of course, I got to work on this. All right. So I'm going to look for a bounce back on JP Morgan. All right, I'm going to look for a bounce back on JP Morgan. Let's see, like I say, 149.50 to 150. All right, 149.50 to 150. If we open up tomorrow and you notice that we still can't get above Friday's close, right? You want to take these levels. You want to go with what's first, right? If we start going to the upside, what's your first ceiling? Friday's close. Right? If you open up below it. Okay, if we open up above Friday's close, then we'll see if we can get a pullback. If you just get a gap and go, then I'm just going to sit back and wait for this thing to see what it does at 150. All right? Because that's a big level for JP Morgan. You have Bank of America reporting also Tuesday morning. All right? Big resistance level up here. Big resistance level. All right? So look where you wicked. You wicked right there at 153 on the dot. Pulled it right back. The thing is if JP Morgan would have held 150, 149.90, 150 area, I might be singing a different tune here. But we're right back in the range. And again, that range is 150 to 140. 143.50-ish. Really, it is 140. If you want to get technical with that wick low back down there, right? So it's stuck in a consolidation, guys, right? There's no clear trend to the up or downside. The only trend that you have is short 150, long 140. So if it's not near one of those areas, maybe we do look for a $4, $3 downside, right? That's what I'll be looking for. Do we pull back to this pivot high from Wednesday and Thursday and start to trade higher? That's an option. But if the market's pulling back, why do I think it's going to hold to go higher? You know what I mean? So if the markets are going higher, Okay, and we have a bounce like I think we'll get, and I'll give you guys that. Um, that I think 147 does hold, and you get a bounce back to 150. Right? That's going to be my assumption. That's good, and we all need to, man. We all have to learn from ours. The thing is, especially if you trade options with earnings, guys, is like if you guys know anything about options, then you would know that you shouldn't be playing it unless you're selling the options, and even then, you want to make sure you have your ass covered because it could go against you, right? It could go against you because what it is you're going to be paying up for that volatility, and then once the move happens overnight and you come in the next day, not only do you have that move's already done and it hasn't went anywhere, right? And even if it does go somewhere, if you're paying $3 on a dollar call and you move $2, you're down $100. So you're down, 40% on that option, 35, maybe 60%, depending on if it's a daily or what, right? Depending on the stock. So that's why it's better to be patient and wait, because you're going to get the bell when the bell rings, guys, at 9:30. That's when the market is open. That's when the big boys are there. That's what really matters. That's what really, when you want to talk about price action, like, I use pre-market after hours data and stuff like that too, sometimes, right? Sometimes I don't, because I do know that it's what happens from 9:30 to 4 is what you really want to pay attention to. All right, because you can just have limit orders just up, down, and the market's moving. But what happens from 9:30 to 4 is what really happens. That's when capital is being put to work by institutions or not being put to work. Right? So if you want to play options and stuff, you might want to think about taking advantage of the sell side on that, right? You might want to sell both ways and make sure you're enough. Listen, and that's still risky, right? Because you could be putting yourself into a surprise on a stock and get screwed, right? But if you do it over and over and over and over again and start to see the trend and sell yourself, you sell these, and if you're selling these, I'm not telling you guys what to do. I'm not legally allowed to do that, and nor would I want to do that. I would love to be able to do that, but it's just like you get just knowing like there's uncertainty, right? It's risk. The markets are risk. Housing market, everything is a risk. I don't care what it is. If you want to take advantage of that volatility and that theta, sell options, right? Go sell long calls and match it up, sell some long puts, or do spreads. So therefore you can't lose more than what your spread is, right? You could sell the 440s, right? Or what do we have here on the spot, right? Let's say you're selling the 450 call and you're buying the 447s, right? That's a $2 spread there. And then you do the same for the downside, right? You can either I would sell the lower one, because what you're trying to do is you're trying to collect premium and you're only buying it to be able to cover your risk, right? So you kind of want to buy cheaper, right? So normally when you would do a spread, whether it's a butterfly or iron condor, whatever, right? Your basic spreads, if you were to buy or if you were to sell the 425 put and buy the 423 put, right? That's a $2 spread there. And then to the upside, you're selling the 443s and buying the 445s, right? So you're only losing that difference, right? That's managing risk. But if one side hits, you're still capitalizing on the other. But you got to remember, you're buying you're buying the option below it on the put side. So you'll have to, account for the money that you spent to buy the option, right? Maybe you're getting $100 to sell the 425 dailies, and you're spending 25 bucks to buy the 423 puts, right? You're buying the 423 puts and selling the 425s, so you got a 25 different spread there. So you're making 75 bucks if it hits, right? And same for the upside. So think about that stuff. All right, S&Ps. We didn't push into the 100-day moving average. We did get into the gap, We did get into the gap on the S&Ps. Let's get into the market. I know I've been going on for a while now, but I wanted to have you guys think about some of these earnings, right? Pay attention again to what the earnings come out to be. Do they give guidance? Do they not give guidance? Do they have great earnings and not give guidance? Okay, well, maybe you want to see what the competitors are doing, the companies that are in the same sector, to kind of say, hey, what did they do versus did they have an earnings miss and lower guidance, but this company that we're looking to trade, beat earnings but isn't giving guidance, right? So different things. I'm going to make a video about that. S&Ps. I said Friday, and I still feel this way. All right. I still feel we need to go to the upside to test the level. I said it all last week, guys, and I almost got short Wednesday afternoon into Thursday morning. Thursday morning it was, because somebody asked me if I was still short the market. And I said, nah, because I listen, I kind of just listen, So this is why you want to, if you sense something and you do it, don't listen to what people say, whether someone else agrees or disagrees with you. Because, this 430 was a somewhat of a major level, right? We kind of just went through it and left it. We never pulled back to test it. And I was, for going into the week, I was like, okay, once we started to trade sideways Tuesday and it going into Wednesday morning, I'm like, okay, Monday we took back half the move. Tuesday we're just kind of just hanging out at Monday's pre-market highs and got a bounce. We're trading sideways. We came in with a big gap up. I'm like, okay, what did we do? I figured we started to sell off because they started to sell this thing off pretty early. They started to pull this thing back really early. So I was short-minded towards the end of last week. I did grab it, didn't hold on to it very long because wasn't really expecting the 30-year to give us the downside catalyst. And I'm going to get into the catalyst. If you don't listen, this is some information you guys are going to get here that you're not going to get anywhere else. All right, what have I told you guys? Every Wednesday, we get a piece of data, right, that takes us right to the heart of volatility, and that's the banks. The banks, I guess, are out of the woods, but here's the thing. This is liquidity, right? If the Fed is having to give the banks liquidity, this is a data that comes out every Wednesday from the Fed, okay? This jumped Wednesday when we got it from 107 to 108. Now it's not showing it, right? It's not showing it right now. I don't know why. Let me refresh it. All right, this jumped. So there we go. You guys can see the jump, right? 107.6 to just under 109. What this is the amount the Fed is facilitating to the banks that need money or liquidity, that need to say, hey, our deposits are running dry. We have bonds. This is the swap. You see this rise. This is banks not having the liquidity that they need, and they're going to the Fed. So when you see this rise, this is telling you banks are going to the Fed because they don't have enough money, right? They don't have enough money for depositors. It's pretty important. When did this come out? Wednesday night. What happened Thursday? 30-year bond auction, right? And what happened Wednesday, right? We didn't know then when it came out. You had a little bit of downside here. But why did a 30-year do what it did? Higher for longer. Banks are not out of the woods. That's why you've seen that huge jump in the 30-year. Nobody's talking about it. Nobody but us. And I'm thankful to know about it, right? Nobody has thought to bring that up, right? This is what the Fed put in place when SVB, First Republic, and all those banks were having issues. This is them coming in to step in. The higher this goes, the more it's showing you the banks are still in trouble. We stayed sideways there for a bit. Now we're starting to go up. Well, it's kind of funny that we're starting to go up along with what? Oil. What just started to increase? Oil, things of that nature. It's important. It's really important, guys. Um, so every Wednesday this comes out. You gotta watch it. You have to watch it because they're not out of the woods yet. They're not. They're not out of the woods. Come on. No. No. What is it doing? All right. So this is why I think yields went higher because this data came out Wednesday. It's kind of funny. The bond auction on Thursday, the longer end of the bond is what hit, right? This all ties into the downgrade. What else do we have? What else can make this worse, guys? Guys, we're about maybe a month, 3 weeks into the government shutdown. We still have the government shutdown, guys. If the government shuts down, guess what? The banks ain't getting this. The Fed will be closed. See what I'm saying? See what I'm getting at here, guys? We still have more volatility, earnings, two wars, a government shutdown. So what do I think the SPY has to retest again? I was thinking this pivot area up here, right? We tested there. I want to see us hit this pivot low here at 435 on the SPY. I really hope you guys got what I just showed you. That's some good shit right there. We still have a government shutdown. You have two wars. The banks still need money. They just increased the liquidity to the banks. The Fed did on Wednesday. And then the following day, you had the 30-year bond auction, higher for longer. Things are, there's risk, right? That's risk. So in order for someone to want to buy those bonds, it needs to be favorable to them for the risk, right? You're still facing a government shutdown, right? That's also risky. Who would want to own bonds or treasuries, right? Who wants to own treasuries if the government's going to be shutting down or a possibility of a shutdown? We don't know that they are. We don't even have a House Speaker yet, I don't think. I don't know. You guys could inform me on that if you guys would like, right? But this is the stuff that we offer here. So if you could, do us a solid and hit that like button. Subscribe if you haven't already subscribed. I appreciate you guys so much. If you guys have tickers, throw them in the chat. We'll run through these real quick. So I talked about airlines. Okay, I talked about JP Morgan, right? The airlines. So American Airlines, probably one of the better ones. Guys, if you haven't seen their chart, they've already sold off massively. On the year, they're down. All right, on the year, they're down bad. They're down bad, right? The majority of these airlines are down bad, right? Just a quick glimpse, right? It's down 59%, right? On the year. So if you own American Airlines, you're down almost 60%, which I think I have it written down here, right? Did I do this right? No. What am I doing? I'm sorry. That was 2021. Sorry about that. Yeah, right here. Sorry about that. Yeah, you're down 9%, 8.9%. You're down 8.9%. So on the year, it's down. It's red. Not sure how much further this can go to. Stocks can always go to, they can always go lower. They can only go to zero, but they can always go lower. Maybe we start to see a bounce down in this area. I mean, you'd probably have to think about buying around there. You don't have to do anything, but they just haven't recovered. Look at this daily chart of American Airlines. There's a lot that are doing better, like Delta. And I always thought American Airlines were good. I thought they had the silver ones, I thought. So 2020, you made a little bit early on in 2020, but after that, it went south. It went south. So I'm not sure what happened back here. I forget. I don't remember what happened back there. But again, just about all of them are down, right? They're just about all of them are down. Let's see. What is it? Oh, that's COVID. I'm sorry. That's COVID. I was just reading the chart wrong. I apologize. So Delta Airlines is at that key support area, but it broke it. You know, this thing needed to hold this area here. So rising oil prices, possibility, two wars, right? They've gotten smacked. So if they come in and they do well on earnings, how much is that? How well do they have to do for them to start to reverse this type of trend, right? As you can see, though, Delta Airlines already reported. Okay, Delta Airlines already reported they had an initial um, buy. Didn't last long. It was taken right back. I actually thought about trading that. Look at that red box right in there. And I missed it. That's why I missed it, because right off the bell, it fell out of bed. Right at the bell, right as we open, it falls out of bed. And I'm like, that trade's kind of gone. Yeah, I had a second opportunity here, but by 12:30, I wasn't watching it. So, and then Bank of America. Okay, you've had JP Morgan already come out, do fairly well with earnings. Nice beat. So what does that mean for Bank of America? Right? What's that mean for Wells Fargo? Right? If you don't know this, the way I've taken it is, so Wells Fargo reported Friday, didn't do too bad. Actually looks like they did a little bit better than JP Morgan. Right? They closed above where they opened. JP Morgan closed below where it opened. Isn't that funny, right? These are things you need to think about, right? There's JP Morgan's open, and it closed down here. Opened here. All right, it closed, opened 148, 48 cents to 16 cents, right? So that's that. That's banks. We can watch, we'll watch them. See what the regional banks have to say. But we don't really need to know what they say because we have that Fed data. That tells us everything we need to know. Yeah, snap into. Do you know when they have earnings? Let's look at them real quick. We'll look at them real quick. Let's go into Tesla and Netflix. Then we're going to go into Snap and whatever other tickers you guys have. Snap, DraftKings, that's on the list. I wouldn't mind looking at them. That's actually a good one. Thanks, Bingo. That's actually a really good one, man. Let's go to Tesla. What did we say in the beginning? I want you to remember I want you to think about my face when you go to trade, right? When you go to think about taking a trade, right? What is the trend? What is the trend? What does this look like? Yeah, there's an ascending wedge there, whatever. But it's consolidating, right? You're short in the low 200s, and you're short at the high 200s, and short and long at the bottom 200s. You know, really, this is your range now, shorter term, 230s to 280s, right? You're stuck. Stuck either waiting on earnings or a catalyst. So the thing with Tesla is, Tesla, when it gets moving and it picks a direction, it goes. All right? That's one thing about Tesla. I don't really like, I know, it's dry out, guys. I apologize. It's the winter time. Like a lot of people get hurt with Tesla. They get hurt with like some stocks, but other stocks they do better. Like Netflix, I've traded it. I've had like mixed, things. I've done well. I haven't done so well. I just don't. There's just some people don't like trading Alibaba. Well, I love trading Alibaba. Look at the uptrend, right? It picks a direction, it goes, right? Pulls it back, consolidates, picks its direction, goes. Massive volatility here. It is funny. Yeah, it's truth. Right? Look at this downtrend, right? It picks the direction and it goes, right? Downtrend. Consolidation to the upside, bang, it goes. What is this? Consolidation, right? Consolidates, picks the direction, goes. Turns itself, consolidates a bit. I was long down here, just so y'all know. Before I started this stream, this was a beautiful lesson on why you should look at like RSI and MACD and why I use them, right? A lot of this you can use for trend reversals to dictate whether or not you still have a trend continuation on deck, or are you about to have a trend reversal, right? That's the three things that the market does, right? trend continuations, trend reversals, and consolidations. But, you know, I could go into it a whole nother day, but, you know, you're making your RSI is ripping to the upside while Tesla makes a new low with a nice big engulfing candle to the upside on what? On volume. That was everything I needed to go long, and we got the gap up. I rode that thing for about 2 weeks. I went long 3 times. I went long 3 times on Tesla back then. But anyway, because I know when Tesla makes and when it picks a direction, it goes and it doesn't stop. So right now we're in a consolidation phase. If we pick a direction, whether it's to the upside, whether it's to the downside, I assume it's going to go, right? I'm going to look if we get this break of 240.75, all right? I will look for that. I think we're going a bit lower. I mean, you know, sitting here with you guys on the stream, all right, you know, I felt like when I looked at it earlier that I was getting more to the sell side up in these ranges than I was getting to the buy side. We have a lot of buying and it doesn't go nowhere. It feels like it just can't get a bid to go higher. So do they give up? I don't know. We'll see. Do the earnings come out great? Continuous beats and doing a bunch of things. Good for the company. Maybe new, Tesla truck, a lot of new things coming out. Maybe they have another business venture that they want to do. So we'll have to wait. But right now, Tesla's in a consolidation. I don't really care for the chart. I really don't. You know, it is in a wedge. I don't know. I don't know what, to me, just recently, it's got a lot of sell volume. The buying is there, right? The buying is there, but there's no movement to the buy side. But when the sellers hop on the train, it's gone. It goes down, right? So it seems to me it's a lot easier to go down than up. So maybe it does go higher. I don't know, right? Maybe the sellers give up. So I will be watching Tesla. I will be trading Tesla this week. I will be trading Tesla. So we just got a retest of that 50-day and 100-day moving average on Tesla. We were fighting in between them. We were stuck, and it broke out, right? As you can see here, we were in between them, and it gapped above it. Pulled it back, couldn't hold it, stuck between it. If you don't, listen, this is why you should join us if you haven't already. I called this out. This day right here with that big green candle. I said, guys, today is the day that Tesla is going to either break to the upside or break to the downside. This is it. Those moving averages had confirmed on each other. And if you look at this close here, right? This red is your 50-day. This blue is your 100. Look how it just, boom. It was coming because you're getting it. It's coming in, and then it's just like a can of tomato sauce or whatever you want to say. It just, boom, it squeezes to either direction. It picks it, and it goes, right? It just pops right off of that 100-day moving average, which it has been holding as support. That 100-day moving average has been clear support. It's like air. I do apologize. Like, you can just breathe on my mouse, and it'll click. So we're going into Snap and DraftKings, but 100-day moving average is a major leg of support. I want to see if the markets do bounce tomorrow going into Tuesday for retail sales and things are okay with you never know what you're going to wake up to. I might not even trade Tesla, right? We could have some other news that takes me to a different stock, all right? But I would expect a bounce. Again, what happens if the markets pull back, right? Then I'm going to look for if we open up below the 50-day and below that 100-day, because they're both right here. That's what these two red boxes are. That way, intraday, I know exactly where they're at, right? In the mornings, I'll move them where they need to be, but I can already kind of tell which way this, I know where they're at without even having to look. You just tell me where it opens and closes. I can say, all right, it's probably pulled up a little bit, right? Or now it's starting to flatten, right? So if the markets pull back tomorrow, then we open up below these 50-day and 100-day moving average, then I'll look for the bounce back to them and look to get short and look to take profits and take that to like 245, 246, 245.50, 246 area, right? Your support's down in here. So, I still feel like, we can go to a 15-minute chart, 30-minute chart. It's tough because if we do bounce back and we cannot get above Friday's pre-market low, then, it's still weak. But you may not have much movement here until it breaks this moving average, right? If it's either going to hold it, buyers are going to jump in. But do you think buyers are going to jump in with that type of selling? Right? Look at this selling. This is a 30-minute chart. I could pull up a 15-minute chart as well. Right? But this whole area is chop. So you could just sit from the moving averages and bounce to 260 like you did here. Right? It's consolidating. It's actually flat. Right? Tesla is technically just consolidating, just like Microsoft. So I spent too much time on that. We'll see what happens. Again, markets pull back. I'll look for it to gap below the moving averages, bounce back to them, reject them, and look to take it down to the low 240s. All right, now if we open up higher tomorrow, then I'll look for the gap up, and I'll wait for the pullback. Then I'll get long if I still feel the markets are long. All right, and I'll take that long up to 260.50 area, 263, right? Till we get to this top side resistance. As easy as that. And I talked TSM, talked about that. Let's go into Snap, and we'll go into the other ones because I want to go over them. Let's go into Snap. So it doesn't have earnings for quite a while. It actually until December. Wow. Man, this thing I can't believe it. If anybody got this thing before COVID, which I almost bought some during COVID at its lows, and you didn't take profits up here, oh man. I know people that didn't, but, it is what it is, Remember, and I got this from Jim Cramer, believe it or not. You guys have to remember, it's not yours until you take it. Right? Turn it into cold hard cash. Leave a piece on. Maybe sell it. This is what I do. I would sell it. Right? And I would put that money that I just got, profited off of, and I'm going to put that into something else that I feel is on its lows, or I'm just going to put that money somewhere else and put it to work. Right? Rotating. Kinda. Right? We've gone too far too quick. It's time to take some profits because this ain't adding up, right? It ain't adding up what the company's got going on versus what the stock price is. That's why it's pretty important to at least have a basic knowledge on, how to read their finance. I can't think. I'm having a brain fart right now. All right. So now I have way too many lines on here. I have not played this thing in a while, can't you tell? You have a nice double top up there. This thing is also consolidating, but it's on the lower end of the consolidation. I don't like that candle. I'm going to tell you that right now. I don't like that candle we put in on Friday on Snap. The good thing is it closed green, but I don't like it, and I'm going to tell you why. Just give me 1 second. I'm sorry. So, I should leave that one, but I don't know if we're going up there. So I look at these, right? I picture these candles, and this gave me somewhat the upside on the S&Ps, or the downside. Come on. I need to zoom in. Hold on. Let me go back. All right. So this candle here, I look at this as, you could look at it as a golf club, a like a sledgehammer, right? And this is how I look at it, right? We have this, right? They're setting. I know his arms are really long, right? So I picture this, all right? This person, right? And this is the ground, okay? This is the ground. And this is, again, this is how I look at it, right? You have the ground and a cliff, right? And what happens, right? The ball gets hit, okay? It goes up. That's what I get out of that candle when I see that. That's how I picture that daily candle all the time, and it's never failed. It's never failed, right? We're putting it, and it just goes up, and then boom, just falls off the cliff. Now, what do we have here? You have the same candle, but to the upside, right? I've done this before. I've showed you guys how I think about these kits. Those two candles are important, right? He swings, boop, it gets a bounce. Let's see if we get that bounce. And then it just rolls over and falls out of bed. I'm not sure how much further Snap can go, but that's just how I've always been taught. When I see those candles, that's what it means to me. Doesn't mean that that's going to happen. Something could change. You had some nice volume there, but how much, right? How much of this volume is selling, right? How much of that volume is selling? Now, what happens when you have a candle, right? That's to the upside. It looks like this, but it's reversed. And you got one over here somewhere. I thought I seen it. Kind of right there, but not really. But if you have a candle, right? And see how these goes, guys. See if you start seeing this, okay? And see if it doesn't start, if you don't start seeing the same thing. Right? Let's put a line here. Right? And we'll put that here. Okay. All right. So now we have it to the upside. I'm going to put this here. All right. I look at this, right? This hammer candle, right? With the same way as somebody holding it, right? And they're standing there. I know if you guys are watching it or not. Okay. So I'll make it real quick. Okay. Okay. I'm going to show you. And you're going to see if this starts to happen. Right? Okay. All right. So now he's swinging, and you have a candle, okay? And you have the candles here, okay? And you're hitting the bottom end of the candle, right? Whether it's green or red, it doesn't matter. I'll just put like a peach because it doesn't matter, right? You hit it, and then it's flipping, right? It flips, and it goes higher. Because you're hitting what? You're hitting the bottom end of the candle, right? Just picture them like using this to hit the bottom end of that candle, and it flips higher. So that's how I've always remembered them. To give you guys, a quick, thing on that. So I think Snap could go lower. Let's go look at the let's go look at it. All right, let's go look at it. I'll just delete this real quick. I'll leave the other one. This is kind of funny. Let's see if it happens. I'm going to leave it there because it's a good drawing, but we'll see if that actually happens because that's how I view them. All right, that's how I view them. So sorry if you guys sat there with me through that. But yeah, you said Snap and DraftKings. It's getting kind of late. I'm gonna want to watch semiconductors too, because now we have semiconductor news, specifically Nvidia, right? We had news I told you guys with Microsoft that was coming out in October. That news came out. All right. Um, let's do it. All right. So that's that. That's Snap. I don't think much of Snap. I just don't know how much it can, you know, do what it does. um, I think you get a bounce, right? I think you bounce back to $9. I would look to bounce it back to roughly like $9. Take that back. All right, take that $9 back, and then it's sell off. Right, I look for it to just sell off. Um, I'm not on a daily chart though. Let's see. Let me go back. I didn't look at the I didn't look at the Oh, so there is the candle there. It did have a big red day. Would you see that? Would you look at that? That's funny. It did have a red candle. Um, it is trying to reverse a bit. It is trying to reverse. It is trying to reverse. Sorry, guys. I just want to make sure the stream's still on. I know I probably put you guys to sleep, so I do apologize. How long is this thing going on? So let's go over some stocks real quick. Where are we at here? Why is this doing this to me? God damn it. So an hour and 20. All right. DraftKings, do we have a catalyst for them? That's my question. Do we have a nice setup for them? Possibly. In order for me to get short, I'd probably wait to get long down here at $27, $28. I don't know. Unless there's a catalyst, it does have a nice little pennant going on there, and I need to, that is a nice pennant. So it does have earnings coming up. Nice. Same thing as Tesla. Isn't that funny? So it's consolidating right now. And it looks like we're going to go higher and then lower. Right? Same setup, guys. What that candle we just drew. See if you get a bounce up to $30. And I'd look to get short up at like $30, $50. I'd look to get short on DraftKings. And look at that volume you have sitting up there at $32, $34. Look at that, like $33 area. Look at all that sell volume you have waiting for you up here. So anything up here, I'm short. And look, I already have the box. Right? I already have the box up there. So that's what I would be watching on DraftKings. 50-day did cross over the 100-day moving average. We have earnings coming up November 2nd, so in a couple weeks. This is a nice support zone. If DraftKings breaks 27, it's like, yeah, if DraftKings breaks these previous lows here, like the low 27s, I'd look for it to start its sell off. I would see if you can get this thing back down at like $21, $22. This might actually be a nice trade. It might actually be a nice trade. Oh, this is a weekly chart. That's a weekly chart. Oh wow. I'm really off. So yeah, guys. So that's pretty much what I have. I'm going to go into a couple other names. But yeah, with that being said, that would be my plan for DraftKings. If you can't hold that level right there, which we have it marked out, 27.50, 27.48 area, you got to say, hey, you have some support here, 26.30. You have some minor support there. But So you would obviously say, all right, if it sells off, you could get a small bounce off of it, but then look for it to roll over and break it. Maybe I'm wrong, right? Maybe I'm wrong, but for a fact, I do know up at that 33, 34 mark, you have a lot of sellers sitting up there waiting. I would look to get this thing a bit lower, but right now it's consolidating. It's trading sideways. So until it breaks down or breaks above any of these levels, then you would look to go long or get short once it does that. You want to wait for the breakout and pull back. You don't want to just get long. You could if there's enough momentum. What is good, though, is it's holding the 100-day moving average also. Just like Tesla, right? Tesla's consolidating the same exact way, and it's just holding the 100-day. And the thing is you broke above the 50-day. You tried to hold it. It broke the 50-day. Chances are the buyers at the 100-day, there's not many there. There's not many there, and I would look for this to break. So I'm actually going to put DraftKings on my watch list. For this week. DKNG short. That's my initial thought. But we'll see if it can hold 100. Not sure if it will. It depends. If the markets go higher, then maybe it can. This is why I say you guys have to understand that, like, you got to come into the day saying, all right, from a technical standpoint, the S&Ps and the NASDAQ, I think, go higher or lower. Therefore, anything you're looking at stock-related probably goes the same direction, right? Depending on what sector you're in, right? Healthcare, technology, banks, so on and so forth. Let's go into good stuff. So let's go to Apple real quick. Apple's in this range where it tried to break out. A lot of these names are kind of just sitting there. We're in a range. We're range bound right now. It's kind of trading in a downtrend, but I would honestly think that to me this is a consolidation, right? This is a consolidation. It pulled back to test the 50-day and that level here of why does this mouse do this to me? I got to get a new mouse. If you guys want to send me a mouse, hit the like button, subscribe, share this with somebody that would like to be here. Even share it with somebody random. That way it helps, where other people can find this stream to come here. Normally the streams are a lot better. I swear. I just had some mix-ups this morning starting it, and it just threw everything off. Pull back and test the 50-day, right? We did have a nice bounce here, all right, off of this, what is that, like last Friday, Tuesday, Monday high, right? So you had a nice retest of that. You didn't close below it, which is, saying a lot. So Apple, I would watch, and again, it's going to all depend on the markets and what the markets do. I would look, right? See, it held this nice up day. See what it does. You're in an area where it just is consolidating. All right, it's consolidating. If we get a bounce, right? Let's say it sells off to like 177.68, right? 178 area. Let's say I think we get a bounce here. Okay, so if we take a small bounce, right? Is this worth trading? This might be worth trading. But, is a day like this worth trading Apple? Yeah, you could take the end of the day, but you know what I mean? If you're trading options, this is the day you want. You want that momentum. You want volume. You want momentum. All that fun stuff. I don't know when Apple has earnings, but I'll have to look. We got to see if it can hold up here, right? And what do we have sitting right there at that 178, high 177s? You have the 50-day moving average. You put in this little double bottom, I guess you could say it was, triple bottom, right? Resistance, support, support, support. It breaks out. It's pulling back, right? Who's to say if we bounce back to 180 and then we just sell it off, right? And it can't go higher because we already have one lower high, right? You have technically two, but you have this lower high right there. So you've already rejected 100-day moving average. That's that blue square. So Apple's doing the same thing. You're stuck between two moving averages. Um, yeah, so that's Apple. Microsoft, a lot of these stocks are doing the same thing. And it's because we're coming into earnings, right? Look at Microsoft. Just sitting in a consolidation. It's literally sitting sideways. And of course, the news came out Friday morning, and it's my fault that I didn't look, right? But you had two different news catalysts for it to come out. But it was the European news with approving or not approving them and their takeover, their buyout of think what Activision or Take Two, something like that. So it's important to watch that. I don't think we have many people here now, and I don't blame them because it's late and the stream wasn't that great anyway tonight. Microsoft, there you have resistance up here, so we'll look for that. We have news, semis. All right, semiconductors, another one on the list that I'm going to be watching. A lot of people are talking about this little Pentagon thing you can draw out of it, but we have some nice gaps down below, right? Let's see what happens tomorrow. Nvidia might be in play tomorrow. Now I'm going to re-go over my charts, but so later on in the week, not later on in the week, but like tomorrow and Tuesday, I'm really going to dive in on playing earnings, guys. We have some great opportunity coming. Take advantage of it, right? Know the trend. Wait. Or, if you can't wait, go small if you buy anything or think about selling the stuff, guys. Our job here is to make money, right? And our job here is not to catch the whole move, right? We catch a trade, right? We're getting that continuation, just taking profits as we get them. Whether it's making new highs or it's making new lows and we're short, right? It doesn't matter. Identify the trend, okay? Is there a trend reversal taking place? Is there, is it stuck in a range and we're short at the top side of the range? Right? Things like that. Know the trend, don't fight it. A lot of stocks are stuck between the 50 and 100-day moving average. And if I'd have to say anything, I'm sure Nvidia might want to break down and get itself inside the 50-day and 100-day, just like every other big cap tech name. So I expect the 50-day, I expect Nvidia to get back down here. Right? What is that? 440, 439. All right. Thank you guys for joining us. I apologize that the stream wasn't on point like I intended it to be. Things got a little messed up when I opened the stream keys up, I guess. So, guys, have a great night. Get your sleep. I'll see you guys in the morning. If you haven't done so, hit that like, subscribe. If we could have that opportunity to be brought forth to someone else that would like to be here and ask questions and go over lessons and go over charts. We do this stuff free 99. Tomorrow's live stream, tomorrow's trading session is going to be 100% better. Okay? I'm a little disappointed on the way the stream turned out, but I hope you guys got a little bit of knowledge. Right? We can watch gold. We'll watch it with oil. Gold, silver, oil. Okay? Healthcare kind of was catching a bid. Technology is stuck between the 50-day, 100-day, those two moving averages. They're consolidating, okay? Where are our pockets of liquidity that is going to pay us and that we can get on the right side of that move, okay? That's our job. Find the pockets of liquidity, get in there, get out, take our money, move on to the next one. God bless you guys. Thank you guys so much for joining us. May we find some peace in this world. You guys have a great night. 6:30 in the morning. I will see you guys. Have a good one. Thanks. Thank you guys for tuning in.